When the phoenix stumbles, Bitcoin's great crash of 2025, what it means for your money, your mindset, and the next big leap in wealth. In the crisp dawn of November 2025, the entire digital asset world took a collective leap backwards. Bitcoin, the king of cryptocurrencies, slipped from its throne. Suddenly, headlines blazed: Bitcoin slides below 106k, crypto market cap nears 3.5 trillion, sentiment plunges to extreme fear. What was once heralded as the future of money is now confronting one of the sharpest sell-offs, major liquidations and institutional hesitations in recent memory. This is not just another downward correction. The scale is unmistakable. Liquidity evaporates, whales unload hundreds of millions, support levels crack. In October, a major liquidation event erased billions across crypto markets, 9 times larger than the previous February crash, 19 times what was seen in 2020. Yesterday, Bitcoin hovered around 105,000, 108,000, and experts warn, if the next support fails, it could fall toward 88,000 or even lower. You are watching a paradigm shift. And this crash is the prelude either to a renewed ascent or to a crypto winter of chilling proportions. But what does this mean for you, for your vision of wealth, for your mindset about money and assets, and for your next move in the world of real estate, passive income, and investment? 1. What's happening right now? Bitcoin has broken major support levels. It dipped below the 200-day moving average 109,800, a red flag for long-term momentum. The crypto fear and greed index plunged into extreme fear territory, scored 21,100 as institutional flows shrank and risk assets were dumped en masse. Large holders, whales, reportedly offloaded around 600 million in Bitcoin over a short period, an unmistakable sign that some smart money is stepping aside. The broader crypto market capitalization fell, nearing the 3.5 trillion mark, indicating risk parity with global financial sentiment. External triggers: the Federal Reserve's cautious tone on future rate cuts, geopolitical tensions, tariffs, global trade uncertainty, and a virus of fear spreading through risk assets. 2. Why this matters for real-life wealth building. You might ask, why should I care about Bitcoin when I'm more interested in real estate, passive income, and building wealth in the physical world? Because this crash is a shaking of the foundation beneath many speculative structures, and that presents you with a choice. When risk assets wobble, investors look for safe havens. Historically, that means real estate, high-quality properties, rental income streams. A market dislocation like this creates opportunity. The fear that pushes out the weak-hand traders often lays the groundwork for contrarian investment moves. Your mindset matters more than ever. You must choose whether to panic or to prepare. Wealth doesn't accumulate by following the herd, it grows by predicting the storm and positioning accordingly. 3. The hidden signals you must notice. Institutional outflows: when big funds are taking money out of Bitcoin or crypto ETFs, it's not just retail panic, it's deeper structural re-evaluation. Asset flight to alternative investments: look at how investors shift from volatile crypto to tangible assets, land, properties, rentals, commercial real estate. Support levels breaking: psychological impact: once an asset breaks a key support like Bitcoin's 106k region, it can trigger cascading sales and self-fulfilling downturns. Macro factors matter: the Fed's rate decisions, inflation data, global trade, and regulatory signals all feed into risk assets. Your real estate and passive income decisions must account for macro winds too. 4. What should you do? Not advice, but insights. 1. Avoid panic, but respect the risk. This is not a blip. Take a moment to reassess your portfolio, your exposure to risk assets and how much you depend on volatile markets. 2. Shift some attention to tangible assets. Real estate, rental properties, passive income mechanisms become more attractive when speculative assets fall. 3. Build optionality. Have more than one income stream. If one part of your portfolio falls, say crypto, another real estate rental can stand firm. 4. Mind your mindset. The strongest wealth builders use downturns to buy value, decline to buy hysteria. Use this moment to strengthen your discipline. 5. Educate yourself continuously. Understand macroeconomics, asset cycles, and how real estate, passive income, and cryptocurrency interplay. The winners of tomorrow prepare today. 5. The bigger picture, from panic to opportunity. In every crash lies a spark of opportunity. When fear grips markets, when headlines scream worst month in 7 years, you get discounts, motivated sellers, and strategic moves that the masses cannot see because they're frozen in fear. Your move now is not necessarily to rush into high-risk chasing, but to position yourself. Evaluate deals in real estate, rental properties that generate monthly cash flow, leveraged positions carefully with the right risk profile. While the world worries about is crypto done, the discerning investor asks, where will money flow when the smoke clears? This is your moment. While the headlines are red, you can think green. While the masses flee risk, you can quietly position for when calm returns, and when many look back, you'll find yourself already standing at the next opportunity.